In a continuation of providing case studies on loans that we've made, here is one loan. We also went to the borrower and asked them for their views. Let's hear from them first, and then I will provide some more details around the loan and our metrics.
Gatsby, we were in a complex situation in the middle of a reorganization to make a settlement with the bank.
On the middle of the restructuring process with the banks, and Stabilis Capital came in, performed all the due diligence on a very short period of time, and we were able to secure the funding needed to reach that settlement with the bank group on the amount of time that we needed to.
The Gatsby asset had 3 risks when we looked at it. It was in bankruptcy, it was in Puerto Rico, and it was a retailer. 2 of those risks we mitigated as we looked at the collateral, because the largest piece of collateral was already leased to the federal government and had been converted into office, and not only officed to the exacting standards of the US federal government. The last risk was bankruptcy, and we mitigated that risk by telling the borrower and the banks that we would only provide exit financing, thereby mitigating that risk as well. So we made them a 15%, 75% loan-to-value loan against essentially federal government risk, taking away Puerto Rico retail and bankruptcy risk. We then gave them an additional line of credit to get an additional federal government client. When that line of credit allowed them to sign a lease, they were able to refinance our loan into the same banking market where they were only a year ago in bankruptcy and in a liquidation scenario.
We were able to pay off the Stabilis Capital loan. We were able to secure a long-term financing with a local bank, and we are concentrating on a lot of opportunities that are coming up to our doorsteps and growing our businesses in Puerto Rico.